Good Thursday afternoon to you. Welcome to the Jon Sanchez Show on News Talk KOH. It's a pleasure to be with you and a pleasure to be with my Tuesday in the Horn. We're actually waiting for Mr. Edge to be joining us in just a moment, but we do have Mr. Millard, Dwight Millard, Highlands Mortgage. How are you, my friend?
I'm doing fantastic, John. How are you?
I feel bad for you, brother. I'll
We
just come
predicted
right
it,
out.
though. We predicted it.
Yep, come right out of the gate and just tell you, I feel bad for you with these 30-year mortgage rates moving up after a Fed interest rate cut. And like you said, exactly what we predicted would happen. Yeah, I don't know what else to say about it. It's a tough situation. Have you been fielding calls from people like you normally do the day after?
Absolutely, absolutely. And they're basically saying, "Hey, the Feds did this. You know what? The rates. I heard the rates are
Yeah,
going
how much
down."
the rates go down, Dwight? Yeah.
Yeah. So it's a difficult situation to try to explain to people, but we've been here before several times when the Feds, go back a year ago, and
You know what frustrates me? There was a lot of things yesterday, not so much on the Fed side. Well, I'll say on the Fed side, a lot of things frustrated me yesterday. But because we covered it on the show yesterday, Jason. I think you're up 13 basis points yesterday on the 30-year mortgage,
yeah,
right
yeah,
there.
yeah.
So let's just jump right into it. Up another 6 basis points today. You're now at 633, right? All that momentum you had going down for so many months, all completely reversed.
Yes.
And again, I think what happened. A couple different things. Number one is Chairman Powell yesterday indicated they're going to let the balance sheet continue to run off. They're going to take some of the pros on the mortgage-backed security side, and that's why we were talking about you on the show yesterday. And then, of course, the other things they're when those bonds come due, they're taking it and they're buying short-term treasuries with it, right, to drive down the shorter end of the curve. Well, the shorter end of the curve, the 2-year, that didn't do you any good, right? You focus on Ginnie Mae's, Fannie Mae's, and of course what the 10-year is doing. So his move yesterday did nothing with this new runoff of the balance sheet, or I should say new, but in addition, did nothing for mortgage rates. He even talked about the struggle that housing market's going in. And then, of course, his other great comment, which was, it's not a foregone conclusion that we're going to get an interest rate cut in December. And the street, panicked on that. Like, really, guys, what do you think he's going to say? He's not going to come out, right, Cory? Cory just joined us. Powell's never going to come out and go, oh, hey, guess what? Yeah, just preparing everybody for we're going to give you an interest rate cut in December. He always says that. But again, the momentum's on the downside. They're not going to pause in December going into a brand new year. There's no way. But everybody panicked on that. So go to.
I was just going to say, he said, not only is it not a foregone conclusion, it's not even close. So maybe they are going to pause.
You're right. Not even close. Yep. Yeah. Cory, I think we still have a little bit of technical problem with you. I'm just kind of hearing every few words. If I could get you to jump out of the room and come back in, let's see if we can get a little bit better connection from you. Thank you, buddy. All right. Well, with that said, we'll talk more about the mortgage rates here in just a second. Let me tell you what we have lined up for you this afternoon with Cory and Dwight. Tuesday, if you joined the show, we went into a really important topic that's going on right now, and that is this: how to turn home equity into retirement cash flow. And as usual, we only got through just a few of our points. And so we promised you on Tuesday that we were going to wrap up these points today. But, as the boys went on to say Tuesday, how great timing of the subject it really was, because we have a lot of things going on, folks. Number one, for those of us that are the baby boomers, right? There's this great wealth transfer. What's the number, Dwight, that we went over at $13+ trillion
Yeah.
of money that's going to be transferred from, our generation, Dwight, over to the younger generation. And I don't remember the exact number, but I think it was 3 or 4 trillion of that is just in real estate equity alone.
Yeah.
So this is going to be happening, folks. But in the meantime, you're sitting on this equity, hopefully. What do you do with it? Especially if you're a retiree and you're going, hey, wait a minute here. Things are getting a little bit expensive. What do I do? I mean, I just had a conversation with my son this morning, and he goes, Dad, and I won't name the name of this convenience store / truck stop. But he said, I stopped and I got a breakfast burrito this morning. And he said it was $12. And I said, I haven't bought one there, and I can't tell you, probably 2 or 3 years. And I used to pay about $4. Everything is getting more expensive. And when you're a retiree and of course you're on a fixed income, you feel it more than someone that is still working. So, that's why we're going to go into this topic, which again is how to turn this equity that you have in the right situations. And again, we're not going to be talking if you think we're going to be telling you to go take your equity out and go buy a boat or go buy a quad or something fun like that. No, that's not it. We're talking about taking this equity that's not doing much for you and turning it into something that's going to generate cash flow. Again, if you're a retiree, or even if you're not a retiree, and you're looking to run the numbers and contact Cory and say, okay, I just pulled out whatever. Dwight just gave me a loan for 300,000 HELOC. Let's go find an investment property. Let's use it as a down payment, or go find something that'll produce cash flow. Right, that's the goal of it. So again, we only got through a few points. We'll recap what we covered on Tuesday and then get into our fresh points. All right, Mr. Edge, nice. I'm glad that you could join us. Any points that you want to add so far? What you're saying?
No, I was just going to say, I thought he was fairly adamant. I don't want to say adamant of no rate cut in December, but he seemed more stern this time about
He
don't.
did seem more stern. I agree completely. Yeah, he didn't seem to be one of his better moves that he's been these last couple Fed meetings, but we will see. Obviously, no Fed meeting in November. It'll all be about the December one as we wrap up the year then, and go with it.
John,
All right, boys. Yeah, go ahead.
it almost goes to show you how much the market was preparing for a December rate cut.
Absolutely.
By the knee-jerk reaction when he said, "Oh, I'm not sure this is going to happen."
Right.
That's what I was warning people. I think they've baked in at least December, if not even January.
Right. A couple times next year.
Yeah,
Exactly.
yeah.
And we said the same thing on the show yesterday, Dwight. Wall Street's a bunch of spoiled brats. They don't get what they want. They vote with their finger, meaning they hit the sell button and they bail out. And they're like, okay, and we saw it with the other frustrating part yesterday, which was Microsoft and Meta, which reported stellar numbers, but they had a couple little unusual charges, and they beat the heck out of the companies yesterday and drove the market down. Yesterday from its highs, it finished down just a little over 70 yesterday, but it was a tough one today. We had a 200-point loss on 110-point loss on the Dow, down 377, 1.57% on the Nasdaq, and a 0.99% decline on the S&P 500, down 68 points. But guys, I'm just going to jump right into the stock market review. It was a tough day today from from a lot of different standpoints. And what was frustrating is the buyers did not, or I should say the algorithms did not step in today whatsoever and come and start nibbling away at Microsoft and Meta and those type of companies like I was saying. And so that was kind of interesting, but don't lose hope. I have some very good news for you as far as what's happened in the after hours. So let me get right to that. And then we can start moving through the rest of the things. So here's how those two aforementioned names performed today. So we had Meta down $85.20, 11.33% loss to $666.47. Okay. Now, the reason, again, great numbers for the previous quarter, but what Meta said was, we're going to take a $15.93 billion non-cash income tax charge. That's all they said. They didn't go through any explanation. So I've dug a little bit deeper into this because I want to see what exactly is this. So the company did say that it stems from the one big beautiful tax bill, right? Now, what Meta did, it required Meta to record a valuation allowance, which is basically, in layman's terms, a write down against some of its deferred tax assets in the U.S. The company emphasized that this is a one-time accounting adjustment, not an outflow of cash, and that it actually expects lower U.S. federal cash tax payments going forward. So, Cory, you're a numbers guy. To me, after I researched this, I'm like, because again, yesterday, that's all they told us. And then finally today, like I said, I did some digging. It's basically like when we give a tax return to Dwight and we say, okay, we made $500,000, but I only had to pay income tax on 100,000 because I had $400,000 worth of depreciation. I'm not a bad guy, right? And I still have the income and everything, but it was a phantom expense. And that's what this was. It was basically a phantom expense. It was just a one-time write down. And like they said, thanks to the big, beautiful tax bill, things are going to be great going forward, but we had to take this one charge against tax deferred assets. It made no sense. Oh, we lost Cory's volume. Sorry, Cory. Yeah, we can't hear you. All right. He'll jump out, get back in here in a second. And then the other one, Microsoft, again, great earnings numbers. Heaven forbid, the company said, hey, we're going to improve our CapEx spending, capital expenditure spending into AI, and the street punished them for that one. So Microsoft today was down $15.77, 2.91% loss to $525.78. Tesla was another drag, down $21.41. Chipotle, another one, they said, hey, guess what? People aren't coming in. And I made a joke this morning on the stock updates. I said, yeah, when you offer a little bit of chicken, some rice, and some guacamole, and you charge $15, no surprise. I never go out to eat. I was joking. My wife and I went went to one the other day. I came out and I said, we got that 2 chicken bowls. And I said, how much did it come to? And she said it was like $4. What are you talking about? Yeah, it like a little over $15 each, and then I think she got some chips and something else, and like, that's why we don't go out to eat like that. Who the
Yeah.
heck can afford that anymore? eBay was down $15.81, 83.73. All right, enough of that. Now I've got some good news that I'm going to share with you when we come back. We had some big earnings numbers out of Apple, big earnings numbers out of Amazon, and I've got also some great news on Netflix. So we'll do that, and then we're going to get into our topic: how to turn home equity into retirement cash flow. Let's turn it over to Kristen Snow right now, Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Cory Edge of Edge Realty, Dwight Millard of Highlands Mortgage. Once again, we finished down 109 on the Dow. The Nasdaq lost 377 and lower by 68 on the S&P 500. I want to go back real quick, guys, before I get to this after hours movement of Apple and Amazon and Netflix. Did a little bit of further digging during the break, and I want to go back to this non-cash income tax change again announced by Meta that again just significantly pressured the stock today. So you two as business owners and myself, we understand this. So what they actually did a little bit further here is they acknowledged that some of their tax deferred assets. Okay, so essentially what these are, tax deferred assets in English, this is credits or losses they had on the book. They were going to use those to offset, like we all do, taxes, right? Losses offset gains dollar for dollar. But because of something in the new tax bill, they may no longer be able to do that. So they reduced their reported net income today, even though the operating cash flow has not changed whatsoever. Again, it was just like a one-time write-off. It has nothing to do, again, great earnings numbers, etc. All right. With that said, let's get into these after hours numbers. And then we'll get into our topic: how to turn home equity into retirement income. So I want to mention Netflix. All right. So here's what's going on, guys. Regular session stock finished down $11.41. That was a 1.04% loss to $1,089 a share. Right now in the after hours, it's up $40.53, 3.72% to $1,129.53. Why is the stock moving up? Well, the company announced a 10-for-1 stock split, which again will make their shares more affordable, of course, going on. Now, here's what you got to do. If you want to be a part of the stock split, doesn't make any difference if you're before or after, but if you want to be a part of it, you need to be a shareholder as of November the 10th. The allocation of the additional 9 shares that you will get will occur on November the 14th, and it will trade post-split on November the 17th. So big news there on Netflix. All right, that one's out of the way. Let's go to the next big mover going on in the after-hour session, and that's our friends over at Amazon. Regular session stock was down $7.44, 3.23% loss to $222.86. Right now in the after-hour session, up $29.54, a 13.25% gain to $252.40. Company reported after the close, as I said, strong growth in the cloud computing business. They made $1.95. Estimates were $1.57 per share. Revenue came in at $180.17 billion. Estimates $177.75 billion. So a nice big beat there. And remember, Amazon's part of the Dow, as is Apple. What's going on with Apple? $1.70 gain in regular session, 0.63% to $271.40. Right now in the after hours, it's up $7.61, a 2.8% gain to $279.01. iPhone makers said basically they're giving the street a really strong forecast for the December quarter. They're seeing extremely strong demand for the iPhone 17. As far as the previous quarter, they made $1.85 a share. Estimates were $1.77. Revenue came in at $102.47 billion just for the quarter. Analysts were looking for $102.24 billion. Nice beat across the board, nice outlook. That's exactly what you want, and so that should definitely be helping the company out in the pre-market and contribute to some pre-market gains in the futures, which again just started trading a little while ago, but they're budging up a little bit. Dow futures up 40, Nasdaq futures are up 289, so almost will wipe out the gain of these hold, or the loss of today, I should say. And the S&P futures are up 41. So this should, like I said, pull us out of this funk that everybody went into yesterday after your friend, Mr. Powell, Dwight.
Yeah.
All right.
Do you want to cover rates real quick, John?
Yeah, let's jump into it. Let's do it. 4 basis point increase on the 10-year today, 409. Take it from there.
409. Okay, John. So if you remember back on Tuesday, we were 6.13.
Okay. Yep.
We are 6.33 today. 20 basis point increase in just 2 days. That's huge. That's huge movement.
Almost 0.25%.
Yeah, just about 0.25%. And it does. I mean, it doesn't look like it's going to be any better tomorrow. Basically, going into Friday, a weekend. I mean, here we go again. I guess you're damned if you damned if you don't. I don't know what. I mean, I know he was kind of hawkish on December, but boy, it's just going to continue to drive buyers away. I'm
Yeah, it
just
is.
surprised at how. I'm not, but I am surprised
It's
how slow it is out there, John.
Dwight and Corey, from an outsider's perspective, outsider meaning someone that's not in the real estate industry day by day like you guys are. I'll tell you my perspective, and I'd like to know if you guys agree or disagree. Being in the industry, it almost feels like to me that the Trump administration looks at the real estate sector slash economy as a wicked stepchild. It's like they know it's a problem going on out there, but there has not been one darn thing, to my knowledge, that they have done to help out the housing sector, right? They obviously, with the Fed situation going on, et cetera, that's, quasi out of their control. But there's been no incentive program. There's been nothing from the government to say, hey, guess what? I mean, Dwight, I want you to share with the audience what you told me a few weeks ago about some of the housing tracts that you visit. And you know, basically you're seeing tumbleweeds roll across the front yard. I mean,
Yeah, John, it's been the opposite to what you're just saying, right? They've increased loan level price adjustments. They got rid of non-permanent resident alien loans. I mean, they're doing things to actually,
negative things.
yeah, exactly.
Yes.
But to your point, you go out there, there's huge incentives. Corey knows this. There's huge incentives going on, and still they can't get the borrower in, the buyer. And, I guess they're coming around, but they're just coming around and leaving. So you don't know you can't really put your hands on what they're doing. Are they looking for furniture? What are they doing? Because they're not going into contracts. So, and this doesn't help it. This absolutely does not help it at all.
I've got a point to add to that, but I want to hear Corey's opinion first.
I agree with that. I think that I don't know what they would do, I guess is my thing. They've been pushing Powell, which obviously in April they can have their wish. They can try to lower interest rates. But to me, you have to take this thing on a global aspect. With the illegal immigration, with people going out, that hurts the costs. I'm not saying that they should do anything different, but it does increase the costs. They've come out to FHFA, and Trump has said, hey, put pressure on the builders. They've got millions of acres. They need to start building houses. That's super easy to say, but these companies aren't going to start losing money. The last thing the builders want is a ton of houses on the market because it brings prices down.
Sure.
Do you know what I mean? So
Fine
it, it's a very hard thing. We've talked about it on the show multiple times. The only other way you could kind of goose things if you wanted to, because they can't get down into the municipality, they can't change the permits, they can't do all of that. They can change some of the tax laws around it. When we talked about when you sell a house, you've got no capital gains no matter what. I still do believe that there is a way, since they control 95% of the mortgages, that they could let somebody take their 3% mortgage to a new property. I mean, easy for me to say, but I'm sure they could get it done if they had to. Like, there are things to do, and things are flying high right now. Like, they don't have a whole lot of, as an administration, they don't have a whole lot of economic problems at the moment. So I don't think they ignore the industry, but it's like, well, hey, everything's going dang pretty good. So
Well, it's not going good though. I mean,
I totally agree with you. Yeah.
it's slowing down. I mean, all right. So let me give you an outsider's perspective. I want to go back to one point you made, and I'm going to give you a fresh one. Let's go back to when you're saying, what can they really do? You mentioned about the no capital gains on the sale of your primary home. Well, let's stop and think about this, guys. How many companies, after the 0809 crisis and the other various crises that we've experienced since that time period, how many companies all of a sudden are now publicly traded companies going out and gobbling up hundreds of thousands of homes that remove them out of the inventory of this country, right, Corey? Right? We
Mhm.
got
Sure.
they're now publicly traded. They did exactly as you said when they started gobbling these things up. They took them all, turned it into a publicly traded company, and boom. But they're off the market. Those houses are off the market. What if you came back as the government and said, hey, you know what? We're going to give an incentive for whatever, I don't know, 1 year for anybody that owns investment property that a 5% capital gains rate, no depreciation or recapture, or 10%, something that is significantly lower than now. Do you not think these people that have all the equity built up in these homes would turn around and sell them and either say, great, I'm no longer a landlord, or I'm going to move to something else? I think it's going to be the first scenario. And think of the amount of inventory that would open up, which would then put pressure on prices, and everybody would come down.
Well, and
But, but
it's a delicate balance too, though, because remember, when you push prices down, you're gonna piss off all the people that own houses. So
Yes.
There's no clear way to please everybody in this
And John,
environment.
you get more bang for your buck with interest rate buy downs, rates being down than 10, 20,000 off your house. You're getting, so the reduction of home prices is temporary and it helps, but it's not long. It won't sustain. You got to get the rates down. You got to
Well,
get the rates.
I don't know if you do or not. And this is where I want to disagree very quickly. I think, based upon what I witness and talk about every single day, which is publicly traded companies releasing their earnings numbers. And I'm going to go back and pick on CMG, Chipotle, Mexican Grill. I am seeing it over and over and over again, guys, in this earnings season. Consumer oriented type of companies like a restaurant, etc., they are hurting. They are the only ones really making stellar money right now is something tech related, AI, etc. Everybody else, they're struggling right now. Why? Because the consumer is stretched so absolutely thin. So I think you could come down to maybe a 3% mortgage. And I don't know if you'd see a substantial increase in new home sales, because you think about it, if you're a worker, right? You and I, the three of us had a long discussion after the show on Tuesday. If you and I are a worker somewhere, especially in the tech industry or somewhere else that you're making 100,000 plus, which doesn't go far these days, you're worried about losing your job to AI. You're worried about losing your job because you wake up one day like Amazon does and goes, and they admit it in their earnings call today. We didn't really lay off those thousands of people the other day because of AI. We just kind of downsized. And you're hearing it a lot from companies, whether it's an excuse or not. Amazon, matter of fact, said it the other day. We're over bloated. We way overhired during COVID, and now we're ridding ourselves of those excess employees. I don't buy that BS, because look, you're a pretty bad manager or CEO if here we are, what are we, 3 years out of COVID, and you're just now realizing that your payroll's over bloated. So I think that's an excuse. I think it's a lie blatantly. But I think that's the issue, guys, is the consumer is fearful of his or her job. And again, the rising cost of everything. So now they're going, I don't really, even if rates are lower, I can't go for my existing $2,500 a month mortgage. I don't feel comfortable going to a new home, bigger home for $3,200 a month or $3,500 a month. Before, people are like, you know what, I'll pick up an overtime shift, no problem. But from what I'm seeing with these companies releasing their earnings numbers, anything consumer oriented, these companies are struggling.
And in the meantime, John, they've added credit card debt. In the meantime,
credit card, look at the buy now pay later companies. Their default rates are rising. Auto loans are going through the roof. There was a fascinating article, I'm sure you saw it, Cory, in the Wall Street Journal the other day about the repo man. Did you see that? I mean, these guys are like, we can't keep up with the demand because people are defaulting so bad on their car payments right now. I mean, those are all signs at the consumer. So that's why, again, just my outsider's view, I think whatever the answer is, we don't have time to go through it today, that some type of relief needs to come to the consumer. And I think that's when you would see this real estate market surge. Other than that, I am just not convinced that lower rates are really going to make a significant difference. You'll get some people off the fence, but to really turn this thing around and get it moving from bottom left to upper right on the chart, I think the consumer needs some type of help in some way. All right, we come back. We'll get into our topic, how to turn home equity into retirement cash flow. But first, Jack Saban has news, traffic, and weather. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Cory Edge of Edge Realty, Dwight Millard of Highlands Mortgage. Once again, a 110 decline on the Dow. NASDAQ down 377. S&P lower by 68. All right. Let's get to our topic that we started on Tuesday. How to turn home equity into retirement income. All right, boys, I'm going to have you go fast on the 3 points that we covered because, folks, you can always go back to and listen to our podcast and hear them in more detail. But let's go to point number one, Cory, HELOC versus, I'm sorry, Dwight, HELOC versus, no, it was you, Cory, I'm sorry, because the rental makeover side. HELOC for cash flow projects.
Yeah, and we've talked about this a lot. You can, if you have the equity, you can go get a HELOC, talk to Dwight. You don't have to use it. We talked about having it just for safety and emergencies, but it'll always be there. If you want to use it, you can take the money and invest in some rental properties, fixing up something else that will create cash flow for you. So a lot of different options there. Yep, A to use it.
John, it's important to point out on that, it's typically a 10-year draw period, so it's interest only, keeps that payment way low. And again, you only pay on what you are borrowing, you pay it back, you got zero. It's just a nice little, you are a very big advocate for the right person to have this little, safety net. And why not?
Yep.
For a maintenance fee of $100 a year.
Yeah. What Dwight's referring to is we always recommend to our clients that they look at us kind of cross-eyed sometimes when they work so hard to get their house paid off and then they go into retirement, or before they go into retirement, I recommend they get a HELOC. And I go, oh, wait a minute here. I just got the house paid off. I don't want any more debt. No, it's not debt unless you need it. But again, it's easier to qualify when you're still working. And number two, as Dwight said, it's emergency money. All right, let's go to number 2, Dwight. Cash out refinance for stability. Touch on that
Yeah,
real
that
quick.
used to be the old trusty one when rates were stable and all that. But all it is instead of doing a HELOC, you're just doing a cash out refinance. You know what your payment is. It's predictable. It's going to be amortized over a certain period of time, and so it just it gives you a little more safety there.
And you went
Just
into great
know
detail. We don't have time to go with the great detail, but what's the percentage again, loan to value, if we're doing a cash
80%,
out?
80% cash out. Yeah.
That's what I thought. Okay, perfect. All right. And with rates starting to decline, could be a little bit more attractive, Dwight, hopefully.
Yeah, yeah, I think so. The major ones are debt consolidation, education, medical bills, things like home improvements. So, especially if it gets to be a large number and you've got that type of equity, why not? Why not
Absolutely.
tap into it rather than, spend all your cash?
Absolutely. And again, as a cautionary note, do not do any of these things we're talking about without consulting your CPA, if you have a financial advisor, et cetera, because again, there's tax ramifications and different things you need to be aware of. All right, Cory, number 3, downsize and invest the difference. I
Yeah.
can't do that,
So
but you can.
yeah, most of a lot of the people we're gearing towards right now have probably lost a spouse, have a big house, the family's gone. So think about downsizing if you don't need all your space, and you can downsize, get into either purchasing a smaller house or renting a smaller house, which is what we talked about a lot on Tuesday.
Sure.
Then you can take the difference and go to somebody like John who can invest it for you, and you can just kind of sit back. You know it's safe. You know that it's going to come every month. You don't have to worry about it. Or you can take that money and say, I've always wanted to be a landlord. Here I am, 80 years old. I always want to be a landlord. So go buy your first rental and get some cash flow that way. But it's just an easy way, to take some of the load off of you from the big house you have now, and then also create cash flow at the same time.
Very good. Excellent. All right, Dwight, you touched on number 4, reverse mortgage income strategy.
I love it. Take an expense and turn it into income, right? So this is for borrowers 62 or older. Obviously, the older you are, the algorithm is more favorable to the amount of money you can either take out monthly or you can take out as a lump sum. So all it's doing is it's taking your equity, and rather than paying a forward mortgage. So for example, if you've got a mortgage, you're paying $1,000 a month P&I, and you've got enough equity and you're of age, you can switch that around, not have a payment, and actually receive monthly income off of it or a lump sum. Again, it's all driven by your age and the interest rates. So with the interest rates coming down, it's going to be a lot more favorable of a product.
Perfect. And as we said on Tuesday, the one of the risks to that, some of the complaints, again, very expensive to do these, so have a thorough understanding. But also, I've seen this, and the boys have seen this. If you love your kids and they think they're going to get some of your equity, make sure you talk to them ahead of time. I've seen more family disruptions when mom and dad die and there's a reverse mortgage and they didn't tell the kids, and it's kind of challenging from that standpoint. So definitely. All right, Mr. Edge, let's go back to you on number 5. Fresh new point here. Accessory dwelling units, the ADUs. Turn that unused land or a garage, whatever it is, into a rental engine. Again, I love this point you brought up because, once again, as you mentioned the other day, Reno is in the midst of approving ADUs for certain areas, et cetera. So I think we could see this one really start to take off.
Yeah, and it probably will take off. These are very popular all over the place right now, kind of all over the West Coast. California has been doing them for a while, but here in Reno, again, I don't think they've got the final stamp of approval on it, but it's coming. I don't know all the ins and outs, but essentially it's going to allow you to take your, beautiful house on the half acre and you haven't used your side yard in 20 years and potentially build a little attached or detached structure on that side yard. You're going to have it's going to have its own sewer. It's going to have its own stuff. Basically, its own set aside, almost like a duplex,
Mm-hmm.
and do it legally.
Yes.
Right now, John, with the zoning, you couldn't do it. What the ADU will allow you to do is do it regardless of the zoning. And as far as I know, again, the restrictions aren't ironclad yet, but as far as I know, there will not be restrictions on it. Could be for your mother-in-law. It could be for a tenant that's going to pay. It could be a short-term rental. I'm sure they're going to iron out some of those, but it could house somebody for you that you're paying to house right now. I'm thinking of older parents. So instead of you shelling out 5 grand a month to have them somewhere, they can be with you, which creates better cash flow for you. Or you can take that unit and rent it out to somebody and create cash flow that way.
I am seeing more and more of my clients, guys, over the years, exactly what you just said, Cory. They're doing this with their adult children. You know, whether it's already there or they have to build one, an ADU unit. And folks, we're not talking like a little, Home Depot, little, wood shack that you put your tools in. We're talking, fairly nice, right? I mean, whatever you're going to spend on it, but kitchen, bathroom, the whole
Corey,
nine.
real quick, I got a question on those ADUs. Is there going to be a restriction? Can you short-term rental those?
So from what I'm hearing right now, they're still deciding on that question, but the way they're going is yes, you can short-term rental them, but you have to have the short-term rental license. So it won't be a free for all. They still have to know you're doing it.
So they
But
want to
as you
keep the
meant, oh, go ahead, John.
Airbnbs down, that type of thing.
Yeah, and they want you to be licensed. They want to make sure there's enough parking in the neighborhood. They want to make sure the neighborhood's okay. And as you were talking about, yeah, I think again, so this isn't ironclad yet. I think it's minimum 800 square feet. Obviously, it has to have a kitchen, it has to have a bathroom. Like these aren't something I was going to say you order off Amazon, but they do sell some pretty nice units. So not something you're going to go buy down the street. These will be very nice units.
Or as I said, out of the Home Depot parking lot, right? The tool shed. That's what a lot of people think when you like ADUs. And
Yeah. No, it'll be interesting. Yeah.
All right, we come back. We're going to hit point 6, 7, and 8. Equity partnering for rentals, 1031 tax deferred exchanges, and then sell, rent cheap, and invest smart to wrap it up with Cory and Dwight. Let's turn it over to Kristen Snow right now, Traffic Center. Kristen, welcome back to the Jon Sanchez Show on News Talk 780 KOH. Mr. Edge, your phone number, sir. Beautiful. All right, Dwight had to step out to an event, so we will continue down our list here again, how to turn your home equity into retirement income. All right, we touched on the ADUs. Now, Cory, this is something I know you've had experience in and currently do, equity partnering in investment properties.
Yeah. And so if you have never been a landlord or never invested that way, but it's something you want to do, but you don't want to, go through the 30 years of learning or whatnot, their easiest way to do it is to partner with somebody who's already done it. And I say it, kind of all different ways. If you know somebody who's very versed in it, then you could come in and say, well, I have the money. If you know what you're doing, let's partner and go do it. You could try to buy into an existing partnership that's already running. As weird as that sounds, you could go anywhere around this town and you see big shopping centers or whatnot. More than likely, there's multiple partners in there. And every once in a while, one of them has to sell out or a family has to sell out. I've been involved when somebody in the partnership dies. So an estate is selling their portion of the partnership. So there's all different ways you could do it. But if you want to invest in real estate, but you don't have the knowledge, but now you have this money or enough cash, well, now we can get you the cash and you just go out and do it via the partnership.
And for those of you that may be new listening to the show, this is exactly how Cory got started 25 plus years ago in real estate, right? You went to somebody with money, you go, hey, I got a great deal. And
Yep.
That's how you kind of got your start.
Yeah. I mean, it's even the stuff that we did just a few years ago. There's always what my experience in a partnership, there's always the people that are boots on the ground, know the stuff, find the deal, polish it. And then there's the people that have the money that say, hey, I don't want to do all that. To me, that's boring, but I have a ton of money and I'd like to invest, and so and they make good partners, right? There's always those two things. So, yeah.
Obviously, when you're talking partnerships, make sure you have an attorney involved, draft the proper partnership agreements and the way the property is going to be titled and held. And there's a lot to that. But yeah, what a great strategy. All right, number 7, the 1031 tax deferred exchange. Again, this is more, you can't do this on your primary home, but of course, any rental property you can. We did a show on this a few weeks ago. Pick up the podcast to hear the details. But again, this is where you're selling an investment property for like kind property. Does not mean you need to go from a single family to another single family. It's basically investment to an investment. And again, by doing so, you're deferring the capital gains, depreciation, recapture, etc. Again, just a great way to move into real estate. Maybe you got a piece of land that's not producing cash flow. And you're like, hey, you know what? I can go buy that rental, and you sell your land for $600,000, and you go buy a rental for $605,000. No capital gains on that deal, and now you got it into a cash flow producing asset. So excellent strategy there. And then Cory, number 8, sell, rent cheap, and invest smart.
Yeah, and we talked about this a little bit on Tuesday, but you have the big house. You don't need the whole thing anymore. You've got a bunch of equity. So if you don't want to pull it out, if you're just more interested in selling it, then sell it. Go find a good rental. You have the right to do that. You don't have to own something, and invest it smart. And again, it can be hands-on investment like real estate. It can be hands-off like going to yourself or a financial person to say, hey, I want to be in something safe, but I want to check every month, and I just kind of want to know how much that check is going to be. And then it'll pay my rent, and it'll pay my traveling to Europe every 2 months, and it'll pay all my stuff. And then you don't have to worry about it. That I say to everybody, and you and I have talked about it, like there's a price for peace of mind, and I don't know what the value is, but it's an incredible
Phenomenal
value
value. Yeah.
to not have to worry about stuff. Like it's
Right.
priceless.
It is. It is. And many times from a health standpoint, people need to kind of, or their body, I hear this all the time from clients, I'm sitting on a couple acres. It's all landscape. I'm tired of paying the gardener, $1,000 a month to maintain it and the $500 water bill in the summertime. I want to be able to lock my door and walk away for a week, 2 weeks, whatever it is, and come back and not have a worry. That's where renting or downsizing would definitely come into play. And like you said, Cory, taking that equity and using it for something else. Just remember, folks, in this whole strategy, what's the common denominator? It's producing cash flow. So if you have an underutilized asset, whether it's real estate or not, just look at creative ways that you can turn it into a cash flow producing asset for you, and you're ahead of the game there. All right, we did it, Cory. Great job as always. Thank you, everybody, for joining us. We do appreciate it. We'll do it again tomorrow on the Jon Sanchez Show. God bless and have a great afternoon.